Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
Fortuna Silver Mines has more than doubled its production thanks to a focus on West Africa. Jorge Ganoza is CEO. Jorge, welcome to Kitco.
Thank you for the opportunity.
Talk about the path to the production that you've achieved. That's really been an accomplishment the start of this decade. I see that you're forecasting near about 500 million gold equivalent ounces in 2024.
Yes, we have seeded the company for the future with our expansion into West Africa in 2021. And over the last years, we have two big achievements. One, the delivery of two producing mines. One of them are a flagship asset, Séguéla. And then, as I said, seeding the future of the company in this most exciting region for gold mining, which is West Africa, where we currently have are present in 3 countries.
So your focus has before been in Latin America, and you saw a lot of the miners are moving over to West Africa as well too. Roughly, what's the production breakdown between what's happening in Latin America and what's going to be happening in Africa?
We have been anchored in Latin America for 16 years.
Yeah.
And in 2021, as I said, we made the leap and landed in West Africa, and we have not been shy about it. Today, about half of production comes from West Africa and half of production from the Latin region. But I'll say our growth today is coming from West Africa.
Why is Séguéla your flagship project?
Very simple. Meaningful production, low cost, long life of reserves, and tremendous exploration upside. In the second half of the year, we beat guidance and analyst estimates for production out of that one mine. We delivered 78,000 ounces of gold. And we haven't reported Q4 results yet. We pre-released production, but I can refer to third quarter figures, which was still the ramp-up quarter. We had cash cost under $400 per ounce and AISC under $800 per ounce. No? So, as I said, meaningful production, low cost, life of reserves, akin to a decade, and tremendous exploration upside.
In your recent conference call, you were talking that you're transitioning out of a period of intense investment, entering a cash harvest phase.
Yes. With the acquisition of the West African asset base, came a development project, Séguéla. So we've been investing in the development of that. And as an outcome of the first quarters of production in the second half of the year, so Q3, we generated $70 million of free cash flow from ongoing operations from the business, big contributor being Séguéla. So, we have started using that cash. We made a $40 million payment on our credit facility in the third quarter. We followed with a $41 million payment in the fourth quarter. And you're going to continue to see making aggressive payments towards our facility. We're not a highly debt leveraged company. Our debt to EBITDA ratio hovers around 0.3. So, but still, all of that is coming from the harvesting of this cash flow, right?
Bring us, let's go across the Atlantic and go to your San Jose mine. I think at the start of the year, there was a bit of labor strife. You also reported in September that you had a favorable court opinion about it. And there was also some good drill results that came out of the project.
Yes. Around March every year, there's always some level of friction, particularly in Mexico, with respect to profit sharing with the union. We managed to contain this successfully in dialogue and negotiations, and had a 15-day stoppage at the end of the day. But unfortunately, it's something that all those labor relations are tricky. Particularly in Mexico, we saw what happened to Palmarejo, Newmont's Palmarejo. Peñasquito in Mexico as well. But it was contained within, a 15-day period. Everything was resolved, and we went back to business. we had a positive court ruling. It's no secret that the Mexican government, this administration, has been adverse to mining, which is sad to see in a country that has such a long and proud mining tradition like Mexico, right? We've been defending ourselves in court against resolutions coming out of the Minister of Environment in Mexico, Semarnat. And it's the third time we get a positive ruling in support of our existing environmental authorizations, which are good for over a decade. We have never lost a day of production for any of these disputes, but certainly noisy for the business. No, you don't want to be in court with the government, but we've been there and we have prevailed. So, and yes, we have some good exploration news. This is a mine that's coming to the tail end of its life. We're right now set to exhaust reserves at this mine by year end. But we're still exploring. This has been a key asset in our portfolio for many years. This mine is a mine we brought into production back in 2010, 11. Has ranked among the top 12 primary silver producers in the world for many years. And it's coming to the tail end of reserves, right? But we continue exploring. A geologist is the first one to arrive and the last one to leave there. So.
Jorge, you were saying that you've had 16 years experience in Latin America before you went over to Africa. I wanted to talk about the cultural change that you have to make when you're managing far-flung operations. I think of kind of the successful companies that seem to be able to do that. For instance, like your Beta Golds, where they have operations that are very far-flung. Is there any types of organizational things that you've had to do being able to focus both on Latin America and then in West Africa? Because it sounds like in all these regions, as you just mentioned, for instance, with San Jose, that you do have to mitigate some risk. And it also sounds like you also have to be hands-on for very different situations.
Absolutely. First, we are a company, for us mining has always been a frontier business. So we're comfortable playing in the frontier. And these developing economies, young democracies, developing nations are out there in the frontier. West Africa, some of the jurisdictions in Latin America. So what we have in Fortuna is a team of business executives, mining professionals that have built their careers in these regions, right? So we're comfortable playing in that field. And with respect to managing that geographic spread, I work with two chief operating officers, one for West Africa and one for LATAM. Our West African hub is in Abidjan, the capital city of the Ivory Coast. And for the LATAM region, I work with a dedicated chief operating officer out of a hub in Lima, Peru. And from those two regions, we manage the operations of the business. I work with an excellent team of, as I said, professionals. And all of them have cut their teeth and their experience working in these regions. So we have a lot of built-in expertise on the regions. A strong corporate oversight on technical services, ESG, or exploration initiatives. So, it works well. And as a proof of that is that we not only, we integrated successfully the West African business, we could have not delivered the Séguéla mine on time and on budget without a successful integration of West Africa in the business. Right?
Fortuna Mines, the stock has been under pressure. So year to date, I think I checked yesterday, it's down about 20%, 26% year to date, whereas like the GDX is down 12% year to date. Why the drop?
First, let me say that I believe I've been in the public markets, in the mining business for 30 years. And I think this is one of the toughest markets I've seen. There is a really...
toughest market now.
Yes, this is one of the toughest markets I've seen. We reported 100 record quarterly production in this fourth quarter, 136,000 ounces of gold equivalent. With that, we closed a record historic year in terms of annual production. We guided 460 to 500,000 ounces of gold for 2024, which will be a record for the company. Our AISC hovers around $1,500. I like to see it a bit lower, but 2024, we have a couple of large capital projects, particularly one in Argentina at our Lindero mine. We have a $41 million leach pad expansion that will serve the mine for a decade, but we have to invest $41 million this year, right? Mm-hmm. So that burdens the AISC at the mine and, puts a bit of burden as well on the consolidated AISC of around $1,550. But, we achieved all of that, and the stock dropped as if we had a fatal flaw in the company or something. I focus on what I can control. I deliver the ounces, I deliver the cost, and deliver the growth. We have exciting growth levers in the business as well, with our expansion to Senegal with the Diamba Sud project that we can talk about a bit, and also more growth opportunity in Séguéla. Mm-hmm. At the Séguéla mine, we exited 2023, doing 20% better than nameplate capacity. And I can advance to you that today we're doing probably 35% better than nameplate capacity. We're getting positive grade reconciliation. In the third quarter, we did 31,000 ounces of gold at that one mine. In the fourth quarter, we did 43,000 ounces of gold. And those are our lowest cost ounces, the ones that are driving growth into 2024. So all of that, to me, sounds quite positive. But this is a market where there are not a lot of investors, more traders and speculators. So, I focus on what I can control and communicate, right?
What's it like getting talent these days in the mining sector?
This is an industry that has a lot of bottlenecks, right? And talent certainly is one of them. It's a challenge. It's a challenge. So attracting the right people and retaining the right people is key. And I think in Fortuna, we've been quite successful in doing that. But certainly, if the industry expands, we're all under pressure, right? That's why we see blowouts on capital projects and delays. Mm-hmm. Because there's not the shortage is not just on equipment and tires. When the expansion comes, it's talent, right? Mm. Enough gray hair sometimes becomes difficult to get, right?
Lastly, Jorge, can you talk about some of the key milestones? You mentioned Senegal as being one of them for Fortuna over the next 12 months.
Yes, we made an exciting acquisition at the heart of one of the most prolific gold regions in West Africa, gold belts in West Africa, which is the Senegalese-Mali Shear Zone. On the Mali side, we have world-class deposits like Fekola on the B2 Gold portfolio, or Lulu and Bunkoto in the Barrick portfolio, 500,000 ounce producers. Across the border into Senegal, on the same geology, we have the Diamba Sud project. At Diamba Sud, we have 850,000 ounces of gold that we recently acquired. We have not incorporated those ounces into our inventory of resources and reserves. We're treating it as a historic resource, treating it as an appendix. Mm-hmm. Until we do aggressive exploration this year, enhance our knowledge of the ore body, and grow it. So we have a 45,000 meter drill program budgeted for 2024. It's an $11 million exploration program, with the aim of, again, enhancing the knowledge on the ore body and growing it. The expectation is we can get it past the 1 million ounce hurdle. With that, deliver a PEA. So our expectation is to deliver a PEA, preliminary economic assessment, by year end on this project, and have it feed our development pipeline. We're excited about it. We're putting, it's our largest exploration budget in 2024 with $11 million, 45,000 meters. Across the portfolio, we're drilling about 200,000 meters this year, and a quarter of that almost is going to this one project, right? So we're excited about it. And Séguéla, which continues to give, right? I think those are the two high-value opportunities we see today. in the portfolio. Diamba Sud in Senegal and Séguéla, continued exploration success in Séguéla in the Ivory Coast.
Jorge, thanks for speaking with Kitco.
Thank you.
My name is Michael McRae here at the BMO conference for Kitco Mining.
Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.